Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
There is a lot to play play here, and you bring up actually a good point, even with respect to the U.S. dollar, and again, gaining or being in that sort of downward trend for so long. Generally what goes down must come up at some point. What goes up must come down, and there's all these different things that you can say, but we've had such a decrease in the U.S. dollar and a shorting of the U.S. dollar as well, that as the U.S. dollar begins to rally and gain strength, certain other positions need to be covered, which then perpetuates that continuation. You're seeing this happening with the YUK as well, that obviously the yen, although against the U.S. dollar, or the U.S. dollar here, this chart looks relatively bearish. What this chart is telling us is that the yen is now gaining strength against the U.S. dollar, and so with that sort of bigger picture in mind, you have to think that if the play has been for such a long time based on the YUK interest rates and the borrowing of the yen interest rates, or the Japanese interest rates, the borrowing of yen, and so on and so forth, if that's been in place for a long time, when that starts to unravel, it doesn't just do it slowly and methodically, and it doesn't just do it over a short period of time. It takes a little while to happen, and consequently, you will likely see this play out. Well, who knows how long? Only one can predict, but we have to keep that in mind when we're making our decisions here.
That's well put. Absolutely.
So again, here, guys, all I'm simply looking at with the YUK is the possibility of a little bit of a backfilling into the above this 94 zone, conceivably into the 96 to 98 area here, but looking for the possibility that a continuation, our next sort of near-term target. And again, I keep my targets near term because we do this weekly, is down right in here at the 88 to 89. So it'll be interesting to see where we play within this range throughout the week. But, again, we go back. If you go back 3 weeks ago, we looked at this wedge here and we said, hey, if this thing breaks out in either direction, it's going to represent a significant move. We said the same thing here, and you can see very clearly, very significant drop right here, and we seem to be consolidating in the FX market right in this range at this point. So we're actually touching 94. I've got my charts up here. So again, something to keep in mind. Always, again, there's a few other interesting things here with this in terms of of any sort of continuation to the downside without some retracement, and that's the idea that you can see that we have a little bit of a from this low all the way down to this low, we don't quite have that strength or that momentum, so suggesting that we may take a little bit of a breather here, do some backfilling before a continuation. Okay. Now, we talked about the Australian dollar here, and we actually referenced this in our Wednesday night session. And but last week we were looking at that same sort of a scenario taking place with respect to a wedge formation. And as I said earlier on, again, although this may very well represent a continuation pattern, because we're making higher lows and lower highs, it really shows a little bit of a sort of a indecision. What's interesting is that Steve referenced the relationship and the correlation between the Japanese yen and the Australian dollar, and we see here we've had a similar pattern forming in each of these particular pair values. So right there, you can sort of see that similar and correlating relationship between the two. Now, we saw this actually break out into this 160 to 165 area, which was our upside near-term target. Now, at presently right now, if I just look at where we're trading, we're actually at with the inverse relationship here, we're at 162 in comparison to where we closed at. So we're in and around the same area now as we were Friday, and the idea is that if we hold at these levels, okay, and keep in mind that we just saw a little bit of a cross up in our MACD and our RSI now coming from the bottom up here like this suggests to us that, hey, you know what? There's some continuation here. There's a possibility of continuation because we haven't exhausted the momentum. If you look at if we go down here and we look at our RSI here and how our momentum carried us from essentially this level here up, right into this level here before we played back down in here. Okay, if we look at us sort of starting out in that sort of area again, we still have the possibility for this thing to continue into a higher leg. We have to recognize the possibility that if this little sort of candle here, which closed on its lows, okay, so consolidates and rejects in this area, then yeah, we'll likely retest this zone right in here. So we have to keep an open mind. But a positive day or a bar up into up above this 160 to 165, we've got a lot of potential to the upside. Okay, so again, Steve, feel free to comment on this, but right now we're sort of, again, we're at that key area. You're looking to take this as an opportunity. You could start targeting some of these higher, as we call them, focal zones for potential targets. Okay.
Jace, all I could say is that this is really uncharted territory.
Yeah.
And that's why, I think what Jason, he's making a very good point for all of us in how we develop our own trading plan. I think that's what Jason does each and every week. So he gives you these areas that, okay, it's trading 160, 165, and he's saying, you know what, maybe there's a little bit greater chance that it could go to 170, 180. Surely not a certainty or a guarantee. Jason would never speak like that, but he's saying that there's a slight edge that it may trade much higher because we're just going in uncharted territory. Just see that breakout of last, I guess that was Thursday, or
yep.
Is that Friday?
That was Friday, sorry, yep, exactly.
So, but the volatility, and this is the one thing with all my years of trading, this is what scares me, is that we're trading at, the last time I looked at it, I don't have the numbers in front of me, but I believe that the AUX volatility, and you could go to a lot of places like iVolatility or LiveVol, the ISC, a lot of places you can go to check out AUX. The volatility is in excess of 40 volatility. And last year at this time, it was trading at an 11 volatility. So essentially, it's up from 11 to 40. And that makes sense because, remember, AUX, as Jason was saying, was trading at around 100. And now it's trading at 160. Mm-hmm. So 40 vol, and some would say, is that cheap or expensive? Well, we don't really know. I mean, what the option market is that actually going to calm down a bit because we've already seen a 50% increase. And now the options market is saying we're only going to see a 40% change. Doesn't necessarily mean up, though. It could be back down again.
Yeah.
Again, so what I'm saying is if you look at the volatilities, at least it gives you an understanding of what the options market in general is expecting. And if you're looking for the most volatile pair, it's going to be AUX. However, the option premiums are the highest, so there isn't any real edge by buying the option premium there. You have to believe, if you believe it's going to 170, 180 pretty quickly, buy a call, or I would probably buy a call spread.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.